Asia-Pacific markets slumped on Tuesday with Indian stocks leading losses as the country started counting election votes, signalling that the incumbent Prime Minister Narendra Modi is set to win a rare third consecutive term. Both the Nifty 50 and BSE Sensex indices fell 5%, while main stock gauges hit record highs at the start of the week. Meanwhile, major indices in Japan, South Korea and Australia declined, while stocks in Hong Kong and mainland China made some modest gains. Overnight in the US, stocks were mainly muted as Wall Street looked to find its footing after an uneven start to the month. Let's get more on this now with Jamil Ahmed. He's Chief Analyst at GTC Group in Dubai. Good to have you with us, Jamil. Now, Indian stocks surged to record highs on Monday. Why are we seeing a retreat now?
Perhaps because of some overstretched valuations, but what I would say is that we look at the Indian economy right now as a star performer, maybe somewhat of a diamond in the rough. I'm not saying that it's in a bad condition, but because we've had so many concerns over different aspects of the world economy over the past 1 to 2 years, whether it's because of inflation, geopolitical concerns, some of the headwinds that China was facing because of protracted lockdowns, and although that's now starting to turn the corner, that India itself has actually been so impressive, the data. In fact, the 2020s of the India story reminds me of the early 2000s and that decade of how the market and how the world was starting to look at China. Overall, India is still on track to become one of the world's largest economies. It's already certainly heading towards the level 1 in terms of that league, but it's only going to progress from here. That's what our projections state. And maybe some of this is profit taking. I would look at it as near-term movements. But overall and longer term, I think myself and many remain very much bullish. And that means optimistic over the state of affairs for the India economy.
Right, now over in the US, markets started the month off quite weak. What's weighing on investor sentiment?
We also have to take into account that May was another fantastic month. We had so many hat tricks of record highs and milestone levels, the sort of records that would make Cristiano Ronaldo somewhat envious. We've seen the S&P 500, the Nasdaq, the Dow Jones continue to sprint higher because of hopes over lower interest rate policy, strong company earnings. And the matter of the fact is that despite the highest interest rate policy in a generation, the US economy and corporations, major companies are still performing well. So in fact, once we start to see some of that weight and that pressure from high interest rates start to be weaker, and I mean from the Federal Reserve, the US Central Bank to start to cut interest rates, that might not happen over the next couple of months. That should only support the US stock markets. So I would look at it again as overstretched valuations, a little bit of profit taken. But each time we've seen profits being taken off the table over the past 6, 7, 8 months, we've only seen markets retreat and rebound to more record highs. And I don't see the story of this chapter or the chapter of the stories changing anytime soon.
Right, and that brings me to my next question. The Fed is due to announce its policy decision in a week's time. How likely is a rate cut at this point?
Unlikely. Previously, June was the day, in the same way that May and March was the day. Again, we've been waiting for this anticipation, and investors have had unanswered questions now over the time frame from when the Fed, the US Central Bank, will cut interest rates, and they've wanted answers now since November of last year. What's happening is we're seeing somewhat of inflation coming back up. I look at it as being on a diet. The inflation's come down so much. It was at 9%, which was obesity. It come back down towards 3%. Now it's going a little bit higher, so it's a bit of a plateau. But as long as the Federal Reserve see that longer term inflation will continue to trend lower, they will provide the signal that an interest rate cut is coming. And I would say that September is still on the table, but like many of us say, we're going to start a diet tomorrow. We cannot rule out that September might turn into the diet beginning in December or so forth. But I still think the Fed are on the right tracks and they're still on the right pathway to start lowering interest rates. But overall, we do have to expect the ECB, the European Central Bank, to cut interest rates in 2 days from now.